The less money you put down for your home, the better interest rate you will receive from your bank.
Fact or cap? Let's find out.
If you're not putting 20% down on your purchase, never put anything down above the absolute minimum required by your bank. Even if you want to try to lower your monthly payment with 5, 10, or 12% down. After settlement, if you still have leftover money that you wanted to put down to reduce your monthly payment, wait exactly 51 days after your closing to make sure your interest rate is locked in, and then put a lump sum payment towards your loan balance with your extra money that you wanted to put down at closing. Then you want to ask your bank to recast your loan. They'll let you keep your lower interest rate as well as adjust your monthly mortgage payment based on your lump sum contribution. This will give you a much lower monthly payment than if you just went with the large amount down up front because of the interest rate benefit you took advantage of by following the lowest down payment amount strategy.
This is cap, but not for the reason that you think. So what this guy is saying, but not actually saying, is he's like, hey, get your subsidized rate artificially and then go hack it. So if you don't know, if you've ever thought to yourself, wow, why is housing so expensive in the US? Well, honestly, I blame the government. But in all seriousness, about half the reason, in my opinion, is because there's so much red tape and government expense in building. But the other half of it is that the US government actually heavily subsidizes the housing market and props up prices. You might think to yourself, what? How? I don't know. That doesn't make any sense. Have you ever heard of an FHA or a VA loan? So what this guy is saying is that, hey, actually less down means a lower interest rate. That's not the case. In any kind of natural market, the less that you put down, the more risk for the lender. Therefore, they want to charge a higher rate. However, we subsidize mortgages in the US, meaning your tax dollars goes to buy down the rate of people who are first-time home buyers to help them afford more house. So what this guy is saying is do your 3.5% FHA down, even if you don't need it, and then hack it around to artificially get your payment down. So this is cap because typically less down means more risk and a higher rate. However, this specific strategy, while I'm not in the conventional space, does seem like something that you could maybe viably do. I don't know if it would necessarily be highly ethical or mortgage fraud or not. Probably not. I don't know.